Financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed it out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right, everybody. Good morning. Welcome back to another live stream. Happy Wednesday to you. And hope everybody's doing okay. Dollar index is moving higher here this morning. We'll be taking a look, as we always do in these streams, at a collection of the macro or the fundamentals. We'll also take a look at technicals. And of course, we'll look at sentiment to build a trade plan around what we see going on in these markets. As we get started, if you could do me a favor, just hit the thumbs up button, subscribe, all the good YouTube stuff. Just helps out to support the stream and keeps people coming to the stream each day. Whenever people, are liking it and they tell YouTube via the buttons on YouTube, it helps us out. So I appreciate it greatly. And with that said, let's jump into some charts. So first and foremost, we have the dollar index putting in some higher lows on the daily chart. This continues to be what I believe the bottoming out process of the dollar index, at least for now. And what's interesting about the dollar index, the low that it set, the dollar index low was actually on the day of the Fed meeting. So really interesting to see that, of course, when everybody was expecting, hey, Fed's going to cut interest rates, that's when the dollar actually bottomed out. And for people who are newer to, fundamentals or macro in general, it was a really confusing concept, right? Because you're thinking, how can the Fed be expected to cut interest rates, which is bearish for the dollar? And then when they essentially lay out a plan for cutting interest rates, the dollar goes up. And naturally, that is very confusing to people who aren't especially newer to fundamentals. I mean, it's confusing anyways, but I'll explain it the best I can. Hold on, let me just double check. I just want to make sure the audio sounds good. Let me know in the audience, is audio good? Microphone. Sometimes I have the wrong mic plugged in at home, but I think we're good. So are we buying gold? We'll talk about gold, but I got to talk a little bit about something on that note in just a second. We should start with the dollar, though. If we're going to talk about gold, we should talk about the dollar. If you want gold to go violently back to the highs, we probably would benefit from a weaker dollar, but I personally don't see that to be the case right now. Clear sound? Okay, good. Thank you. So I think the dollar is, from a technical basis, I think the dollar is showing some real resiliency here. I'll explain what I mean by that. So if we take a look at the higher time frames, like the daily chart, but zoomed out, right? You could look at the weekly chart, but basically we had a dominant downtrend that has stalled into a sideways trend, and what I believe to be potentially at least going to test the upper end of this range. That 100 mark is kind of my soft target for where I think the dollar index could go. And I've been long the dollar. I went long UUP. So this is an ETF that tracks dollar performance. So I'm still in this position. And dollar index, to me, price still looks supported. It looks like we're still strong here. I think that we're going to at least test this high here recently. And I do also think that we have the potential to squeeze up to the 100 mark. Do I think we go incredibly bullish from there? Not particularly. And I trade currencies a little different than I trade other things. So I probably would look to take profits off on that move. currencies have a tendency to just sort of chop around and don't have nearly the directional kind of conviction over the long stretch of time that something like gold or the NASDAQ, et cetera, does. But dollar index, like I said, I think in the coming weeks, months, we could see continued bullishness for the dollar. Let's back that up with some other stuff. So we're looking at the technicals. Sure, we've got support marked on our chart. We've got a higher low sequence going on, but why else should the dollar keep pushing? Because if you zoom out, you're like, well, we're still in a choppy market. So this could roll back over. You could stay choppy. What's the dynamic there? Well, there's something I would add in here, which is, thank you. My wife just handed me coffee. Cheers, everyone. That's great. So if I look at seasonality, there was something I wanted to bring up with the dollar index. And actually, I don't know why this is a bug that is in the system. We can actually look at DXY for seasonality on this chart, but we can't do it on the annual seasonality. Like I think there's got to be a filter or something that I'm missing. I got to fix that. But we can for Edge Finder fanatics. Also, I got so much to tell you guys today. There's so much going on. Okay, so let's just move on here. So dollar index going into the end of the year, going into November and December, what do we expect for dollar index performance? We can kind of see we do have some end of year strength for the dollar. And so this year, the dollar index has been tricky because year to date, we're looking at DXY. Dollar index actually tanked and completely ignored seasonality for most of the year. During this period, it kind of went sideways to down. It's consolidated here. But will we get a respect to seasonality from the dollar index into year's end? Well, here's the thing about seasonality. It doesn't work all the time. It's not perfect. But generally speaking, October is holding up so far for dollar strength. You can see the expected move for October is positive. The expected move for November is positive. So perhaps we have a little bit more room to push higher on the DXY. So I think we do have more room. I think we're headed to that 100 mark. That is a move of about 1% away from where current prices are at. So seasonality would favor more upside in the dollar. Relative strength on the macro front would favor upside move in the dollar. I'll show you that. And by the way, guys, this is part of the reason why I've been a little cautious on gold. So part of the reason, gold is pushing lower. There's many reasons that people are claiming for why gold is moving lower. I actually think the simplest reason for why gold is moving lower is because it got overextended to the upside. It's a really simple concept. When everybody gets one side of the boat and it gets too extreme, a little bit of pressure and this thing can drop hard. So I think that's kind of what happened with the gold market. But let's look at some economic data to support the idea of short-term dollar bullishness. Inflation is still sticky at 2.9%. If you contrast that with some other places like Canada, low twos, Europe, I think it's 2%. The US central bank is still dealing with stickier inflation than other places. Now, one argument for why inflation is stickier in the US is because growth is still pretty strong in the US, especially when compared to our peers. Look at European growth. It's pretty much nothing. Look at UK growth, pretty much nothing. So when you're evaluating currencies, right, you have to look at things holistically. How do you value currencies? You value currencies relative to other currencies. Now, if you want to talk about the purchasing power of the dollar, that's just going down. But all currencies' purchasing power are going down. This is a fundamental mistake that a lot of people who don't fully understand how currencies trade, they mess this up. Everyone knows that the dollar is losing purchasing power all the time. They keep printing it, right? Now, then how can the dollar move up in price? It's because the dollar doesn't trade based on purchasing power. It trades on strength or its purchasing power versus the other currencies of the world and their purchasing power. Are we on the same page? Can you guys help me out if this is making sense? I mean, this is so core. If you want to call yourself an FX trader, and you have to use this line of thinking, okay? If this makes sense, type yes, okay? Currencies trade based on their purchasing power relative to the purchasing power of other currencies, okay? If you look at the dollar and you say the dollar should just go down all the time because it's always losing value, then you fundamentally do not yet understand currencies. And that's okay. I'm not shaming you, but look, I'm ignorant about many things in my life, but a lot of people in the FX world are ignorant about how currencies work. And I by no means claim to know everything about currencies. They're very complex stuff. But the general idea is that if you are looking at the dollar, right, if you're trading the DXY, you're saying, how does dollar fare against its peers? And the way we look at that on this channel is we look at treasuries. We look at the trust in the dollar. We look at the strength of the US economy relative to its peers. Ask yourself this. If the US dollar was not the global reserve currency, and you can't choose Bitcoin or gold, who else? Who else is currency do you trust more than the US's? Think about it. Do you trust the Chinese currency? Do you trust the European currency? Do you trust the British pound? Not to say these things are worthless, but do you trust those things more than the dollar? So on a trustability factor, again, humans are humans. I don't trust, I think you should be a little, I think you should verify everything. But I think that if you're talking about a global reserve currency, the dollar's still it. And there's not an obvious alternative. There is no obvious alternative to the dollar. If there was, we would see massive flow into that from central banks. We don't see that. We see massive flow into gold, the ultimate reserve currency throughout history. That I'm with you on. But if you're talking about fiat currency, which can be transacted for goods and services, the dollar's it. The dollar is still the global reserve currency. And that's not changing, in my view, anytime soon. There's no obvious backup. I know I sound like an American elitist. And that's because I am. I'm just kidding. No, but genuinely, you have to start looking at it and you say, okay, well, US growth is better than the rest, right? Of the majors, look at Europe. Look at European growth. It's flat. In fact, I saw something else about the European economy. Out of the top 30 companies in the world, a ton of them used to be European. Now, not one of them is European. I'm not dogging on my European friends. I love Europe. It's a beautiful place, and I wish I could go more often. But we have to face the facts. They're not central or as central as the US is. The US has tons of companies in the top 30 of the world. Now, in the past, it used to be Japan. Japan used to have a ton of companies in the top 30 companies of the world. That's kind of fallen off too. I think Toyota Motors is the only one left. Japanese economy growing, but not growing as much as the US, right? When we just compare GDP growth, I mean, we could do this, right? This is why we build this stuff. So we can compare growth rates, add Japan in there. US is in blue, Japan is in red. Add Europe in there. You can hardly see Europe. Look at the UK. Look at Canada. Look at Australia. You see what I'm saying? I get the idea like, oh, US dollar losing its purchasing power. Yeah, but so are the rest of the currencies. And I would argue that the US dollar should hold value more proportionally than other places with stronger growth. Somebody said INR. Do we have INR? Because India's got some growth. You want to talk about growth? Look, I'm bullish on India. I want to buy the INDA ETF for the long term. India, respect to my Indian friends, of which I have a lot. Look, I went to school for computer science. I have plenty of Indian friends. There were a lot of Indian international exchange students at my college. Really nice people, really hardworking people. Anyways, with that said, I know I'm kind of getting off track here. We're talking big picture stuff. India is a hype market every year. Not interested. Bala, the thing that I like about India is they actually have growth. They actually have, like, we're living in a world where there's a lot of, even China, right? Even China. Let's clear this up a little bit. Like, if you're asking me, like, where do you like to invest for the longer term? It's pretty simple. Invest where there is growth. That's my opinion. India has growth. Europe, not a big bull on Europe. I know there's been really strong performance in Europe this year. And there's been trustability factors that people are worried about with the US, but not as much as people make it out to be on social media. If there was, you would see something interesting or more interesting happening in the 10-year. If people really mistrusted the US to a dramatic extent, there would be a higher premium on lending money to the US government. We haven't seen that skyrocket. If you do, we got problems, because that's going to challenge a lot of stuff. If people really start to mistrust the US government, yields will go higher despite the Fed cutting rates. But so far, yields actually seem to be holding up. Like, part of the reason that I am still very bullish the stock market is we have some good inputs here. Yields are moving lower. Rate cuts are coming. At the same time, oil prices remain muted, but not crashing. Oil 58. Now, I would get worried if you saw oil prices do one of these moves. That would tell me global demand is under stress, but I'm not seeing that. In fact, I think we might try and hold this support area. Let's see. But oil prices low means low inflation, most likely. It helps with the inflation story. Gold coming down is actually a good thing. It was getting worrisome up there. If you're talking about stock market, right? I'm currently still long the NASDAQ. We have Tesla earnings after the bell today. Gosh, there's so much going on today. What's up, James? Good to see you in the chat, my friend. James is, I believe, up next on the show. You guys can always check the live stream schedule, by the way, if you want to see who's up next. Just head over to a1trading.com/livestream schedule. And does anybody want to break our system with me? Let's do it. The Edge Finder free week has just begun. And here's how you can get a copy. Join the Telegram channel. We just dropped free week. So everybody who is in this stream right now with me, if you have ever thought about, like, that Edge Finder thing looks pretty dang cool. Well, thank you for saying that. You said it, not me. If you want to try it out, if you're like, hey, that thing's, a bunch of data, let me explore that. It's free to do right now. So if you want to explore the Edge Finder, you can do so by clicking the link right here, joining our Telegram channel, or scan the QR code. And once you're in there, just find this image, throw your name in the hat, and we will send you a copy of the Edge Finder completely free. There's no strings attached. You don't have to put a credit card down. You don't have to do anything. You just literally get a chance to try it out. If you want to try it out between now and the end of, well, it goes into next week. So you've got the weekend, you've got some time. If you've ever thought about getting a copy of the Edge Finder, here's your chance to explore it for free. No cost to you. Granted, the full disclaimer, we've got a Black Friday sale coming up. And so our goal is to let people try it. And then if you're like, I can't live without it, which is, by the way, that's our hope. We hope you find out that you can't live without it like I can't. and then you buy it. There's no hidden marketing here. We want you to try out the Edge Finder. If you like it, purchase it during our upcoming Black Friday sale. So there you go. Nick turned into an app. We do have a mobile version, but we need to update it. We've added so many features to the main version that the app or the mobile version needs an overhaul. So anyways, I know I'm staying really high level today. Let me just, for the next few minutes here, talk about some actual trades, given all of this this commentary that I've made. Hopefully you guys enjoyed that. I mean, I feel like I went really high level today. Talked about dollar bullishness, talked about how currencies worked, talked about international growth and where it's strong versus weak, and longer term where I see more potential. I really do like the idea of a long-term bullish outlook on India, which is, there's many ways you could play that. One of the easiest ways might be looking at INDA, which is an ETF that tracks the Indian stock market. It's up today 1.4%, whatever that's about. But yeah, buying that one on dips is probably something I'll do at some point. Anyways, NASDAQ still sitting right near the highs, looking for a breakout here. I think that we could get a push through these highs, depending on what happens with CPI and Tesla earnings today. Edge Finder pays for itself, to be honest. No question. In regards to, like, if you are somebody, the thing is, if you're like thinking like, should I buy Edge Finder? Let me give you the line of thinking. Do you want to be a macro trader? And if so, do you want tools that help you to screen that stuff in a simple to read view? I'll tell you the number one, like, this is the insider secret, okay? The number one thing that we try and do with the Edge Finder is to make it easier to understand over time for people who use it. Our number one goal is not to make something that's super advanced and complicated, but instead to focus on making it a tool that is useful to everyone who purchases a copy. Like, our goal over time is to make this thing so useful to traders that they literally cannot leave home without it because it's in their phone or it's on their desktop or wherever they trade. That's the goal. Annual cost, it's a one-time fee, but don't even worry about the cost today because right now it's free. It's free to the end of this week. Again, if you want information on that, it's in our Telegram channel. We'll drop the link one more time or scan the QR code that you see on the screen right now. Get the Edge Finder for free. It is free this week. There it is. But yeah, straight up, if you're somebody who is looking for fundamental simplified or sentiment simplified, this is the tool to explore. Like, for example, we could look at stock market sentiment, and I did this, and like, I'll brag for a second. Like, this trade was extremely helped by the Edge Finder. This trade on NASDAQ was straight up something that I found because I saw some stuff in the Edge Finder. Let me show you what I found. First of all, crowd sentiment got super bearish, which has kept me really interested in bullish setups, right? It's a contrarian indicator. Sentiment played a huge role in this trade because look at the put to call ratio. So the put to call ratio, when we look at the NASDAQ, right? On this day, it may or may not surprise you that everyone got super bearish on that day. And we saw that. So October 10th was the day that the market dropped hard on the Trump tweets, right? Sentiment got one-sided real quick. We saw it explode through the bearish sentiment threshold, the high put volume flagged right here. And you might say, well, that's great, but what if I wasn't looking at that chart on that day? I would have missed that trade. Nope. What the Edge Finder does is it looks at it for you and it tracks it in the sentiment score. So when the crowd gets super one way, it'll flag in your top setups, oh, sentiment looks really contrarian. You may want to look at this. You see what I'm saying? The Edge Finder, the purpose of it is to help spot opportunities when they're forming, not to explain things with hindsight. Right? So NASDAQ still getting a very bullish reading. Dow Jones still getting a very bullish reading. S&P bullish. Russell bullish. We are at all-time highs, and I think we are set to put new all-time highs in. If we don't, I'm going to manage the trade. Like with the NASDAQ trade, I am looking for some sort of higher low on the 4-hour chart or the daily chart. Specifically, I would love to see this move happen in order to trail stops. But I'm also not really pressed on keeping my stop loss super tight on this move because NASDAQ seasonality still also looks really good. So under the technical score, you can see that the NASDAQ and the Dow Jones are getting high scores on the technicals. One of the technical scoring features is seasonality. So take a look at NASDAQ seasonality here. You can see that our technical reading for NASDAQ is very, very strong. 4 points towards technicals. This is because seasonality looks very promising for the indices right now, which the Edge Finder detected. And the trend reading looks strong as well. Based on the daily chart's momentum, the Edge Finder is giving it more points. You see what I'm saying? That's the utility of the Edge Finder. It's screening the data for us. Does the Edge Finder have notifications? Yes, we have a notification system, which is available in our Discord. It is called the, Edge Finder Smart Alerts. So if you go in here, you can see updates. So we have a couple different ones. We have retail sentiment alerts. We have top setup alerts, score flip alerts, Edge Finder. What is this? Okay, yeah. I knew we were missing one. Okay. COT reports as well. So when new COT data comes out, we alert this. This is also a service that you can pick up if you're interested in getting access to that. Regardless of what you need, our goal is just to build the tools to help traders spot that stuff. So if you don't have the Edge Finder, I know I keep drilling this in, but the Edge Finder is free to use this week in our Telegram channel. Like I said, just click the free week information here. Scan the QR code, link in the chat, etc. if you want to join the Telegram and try out the Edge Finder for free this week. Gold is a topic I've got to talk about briefly here. Another down day. I talked about this yesterday, that the 20-day moving average, I think, is your first real spot where bulls would probably try and step in. Let's see if that happens. Like if this melt up is going to continue without falter, I think you probably want to see the 20-day moving average hold. We'll see. I still think, would I buy the 20-day moving average? No, because I also don't think I have. Yeah, see, I don't have a strong enough reading within the Edge Finder anyways. So I'm watching this thing from the sidelines right now. If you get a bigger pullback in some of the data, which eventually the government shutdown, let's hope it happens soon, will come to a close. We'll start getting some more data. We have CPI prints this week, etc. If you were to get, this 38.2%, the 50%, 61.8%, and the data starts to shift, I may take a stab at long gold. But right now, I don't have enough conviction to take the trade. What I mean by that too is like the jobs market data looks bullish for gold, right? It's been really weak, but the economic growth metrics for the US have been really strong, giving me a bearish reading on gold. Remember, gold likes chaos and uncertainty in the economies of the world. So strong economic reads out of the US are not super bullish for gold. So I have, that's part of the reason why I'm also bullish the dollar. So I'm a little bit more poised to be bullish dollar, cautious on gold, waiting for bigger dips. And so far that's been okay, right? Because you can see how quick this thing moved. And by the way, this is a very rare movement. I saw a stat yesterday that was, gold hasn't made a one-day drop this big since April of 2013. I mean, that is a very, very rare move. However, was it completely unseeable? Now, I'm not going to say I knew the top was there, but we knew volatility was high. If you've been watching the streams, you know I've been pulling up this chart, GVZ. Now, I couldn't have told you which direction the gold market was going to move in the short term, but it was not by any means a surprise that we got such a big move. Why? Because volatility, implied volatility, was extremely high before gold made that move. It's still high. You're still expecting big moves in gold for the next few days and weeks. Until this thing drops back down, volatility or implied volatility, the implied moves of gold are very high right now. So if you're in gold and you go long or short, the expected move is going to be big. So we could be up big or down big in the coming days. Is that certain? No, but most likely based on the options premium, the options volatility that is implied in the market, gold GLD options, gold futures options are expecting big moves. And they were expecting big moves before the big moves happened. The options market is really smart. It determines, the options market is the place that determines how big moves are likely to be in the markets. If you don't know about the options market, you really should learn something about it. It's really, really important stuff. If you want to understand volatility, the options market is the place. Okay, guys, I gotta move on here, but we're gonna throw the stream over to the one and only FX James. He's gonna be talking about setups that he's watching in markets now. Remember that if you want to try out the Edge Finder, it is free between now and the middle of next week. If you have never tried it before, this is your chance to do so. No credit card required, no payment. You can try out the Edge Finder for free for a limited time in our Telegram channel. We are dropping the information. If you want to sign up to try it out, there's your chance. Edge Finder, free access in our Telegram channel. Scan the QR code that you see on your screen right now, or click the link that will be dropped in the chat. And up next, we have the one and only Forex James coming in. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Sorry, mic was muted. How's everyone doing? So I've just taken a short on gold, actually, so I guess I'll run through this and then we can move on to some longer term things. It's only a small position. Basically, the idea, I mean, we've already been through my gold bearishness yesterday. Obviously, basically running off the 9-week candle formation, or 9-weekly candle formation that we've had, along with the bearish seasonality into November. So just following VWAPs really on gold here. We've got the daily open VWAP and London open VWAP, both bearish. We saw a rejection off the New York VWAP, or the top of the New York VWAP as well. Sorry, I'm getting my words mixed up. As well as the London VWAP here. So I'm just looking if we can see gold come back down towards 4,000. Whether that's going to happen or not, I don't know. It's a small position. I don't really care too much. But if I can make some money on the momentum, I'll definitely give it a go. So I'll come and revisit that one later in the stream. Still in my S&P long positions here. Been in this one for quite a while now. I was long all the way back here. So almost a month I've been involved, and then I was stopped out with a trailing stop when we had the US and China situation. Then I decided to re-enter when we came back down to this low, and I've just been scaling it since then. Basically the same reasons. I think Nick already covered it. So we've got quite good seasonality. The fundamentals are pretty nice for continued upside on the indices, equities, markets. So all good. We've got the GJ long that's just done nothing, still range bound, and I'm still in my New Zealand US dollar position. I decided to enter again on again, it's meant to be a DCA approach, so re-entered there, but that's it. I've got nothing else going on. FXJ hasn't been caring too much about trading, making good money elsewhere. Not necessarily. I'm just, I'm in some positions. I'm in the S&P, which is the main one at the minute, so I'm just just letting the trades run. Got nothing else to do. Thank you for the free Edge Finder. I hope you enjoy it. The Edge Finder is a very, very solid tool for pretty much any trader. So, shorts on gold, how unbased? Not necessarily. I mean, why would you want to go long? If you can justify the opposite direction, that's fine. But I can more than justify being a seller of gold right now. So again, I covered this yesterday, so I'm not going to go through it all again today. But this 9 weekly candle formation, every time it's happened, it has led to an average of 8 to 13% down within 2 months. The only outlier was the next day on one occasion out of every time it's happened. And even then, it led to a 32% decrease in price after a 2-month period. So the data 100% is saying short. And every time it's happened, the same situation repeats. So I don't see any reason to not take an opportunity short if there is an opportunity. Yes, it's the 10th week. So this was the 9th candle. The 10th weekly candle has never broken above the 9th, which it hasn't done on this one. And we've seen sellers stepping in. So we've got the historical data. We've also got the seasonality. So everything in my book has been telling me to short gold in terms of, again, the data. So there's not been any great technical setups for me, specifically for sort of intraday or swing positions. And that's why I've been on lower timeframes using the VWAP. So this position isn't looking great right now, but that's fine, because if we go, oops, not the 1 month, I need the 1 minute here. All I've been doing over the past 24 hours is selling gold. So I've made pretty good returns selling here, and all the way here as well, just selling these pullbacks, buying the bottoms and then selling the tops, or attempting to anyway. So yeah, so far it's been working out very well. So I'm not going to change that because of any reason, really. So yes, gold has had a great run, but what goes up must come down at some point. And I'm not saying that gold is going to now drop to 2,000. That's definitely not my opinion. But gold is extremely stretched, especially on daily, weekly, and monthly timeframes. So a mean reversion, again, with historical data and seasonality, to me, it's a very straightforward idea. Free Edge Finder. Yes, you can get a free copy of the Edge Finder. I think there's a link somewhere in the chat. I'm fairly sure. Your long oil macro would be on dollar strength and supply hikes. What do you think? I'm not sure, to be honest. Let's see. I don't really think I've got any view on oil. Let's see. Yeah, I mean, trend is extremely bearish. Let me get the moving averages. Yeah, I mean, I suppose there's a nice support level here. It's coming, there we go, stopped out of the gold position. Coming almost into 56, which is a pretty nice psychological level. But overall, I just don't really see any reason to be buying oil right now. So I would be more in the idea of looking to sell the pullbacks on oil. However, it's not a market I trade that often at all, and I don't really pay any attention to it. So if you've got information I don't, then yeah, go for it. Starting to look like you owe me a coffee. No. Dollar yen can continue higher. I still do not think it's going to 160. You know, it could come to around 158. But to be honest, I think if it continues to rally higher, that intervention is inevitable at some point. And I think it will be before we hit 160. Pound outlook. Yeah, still bearish on the pound. There's not really much else to say on that one. I think the UK is still absolutely doomed. I think it's crumbling, but the data is obviously not fully reflecting it. But as someone that lives here, you can sort of see it in real time that eventually it's going to hit. It's going to hit the fundamental data. And with you, James, the short-term day trading approach for gold this week has been shorts. Yes, absolutely. You went to 56. Very nice. Well, if you're in profit on oil, then do what you want. Trail stops, whatever. But for me, I just don't see an opportunity. Yeah, but I think it's a good approach. That's why I quite like having sort of two strategies. Obviously, the swing trading I do is like 90% fundamental, 10% technical, whereas the VWAP strategy is 100% technical. I'll let the fundamental bias sort of dictate slightly. So if I'm really bullish and there's a pair that's trending up, obviously I'm not going to sell it just because it's a VWAP. I would rather wait for a bounce off VWAP than look to buy the dip. But it's not really accounting for a whole lot. It's just trend following and waiting for bounces. Very, very simple. Swiss yen. I'll move on to Swiss yen in a minute. How far pullback XAU is not it's not a complete surprise. Yeah, I mean, if we just consider the average after this, after the 9 candle formation, it's 8 to 13% on average. So let's be conservative and say 8%. So if we take it from the 9th weekly candle, that would be actually pretty much where we are now. So if we are just going to have that 8%, which again is the modest side, that's sort of the lower end of what we could expect, that could be over and we could continue higher from here. Worst case, or the worst one we've had, was at around 32%, which would lead us to around 3,000. Let's just round it to 3,000. So again, it could really be anywhere. However, I think if I was going to be a buyer in gold, I would need to see at least 3,700 minimum. Trading with VWAP is so bad. Why? James just hates the UK. That's true. But there's a reason I hate the UK, and it's because everything here doesn't work. The government's failing, public services failing, everything's just falling apart. How's it going? Just got my Edge Finder. Thank you, and Nick. You don't need to thank me, but I hope you enjoy. The thing is with the VWAP, it's objective. I mean, obviously you can have your opinions and you can not like something, that's completely fine. But, oops, didn't mean to do that. It's just a volume weighted price. It's not discretional. There is nothing really opinion based at all. It's, for example, on pound dollar, the reason that I like the VWAP and the reason I'm quite happy to sort of just rely on it for short-term trading is because if you were sat on a trading floor, you might have a mandate. So the PM or someone may come to you and say, look, I want to buy euros, I want to sell pounds, I want to do this, that, or whatever it may be. Your job is then to execute that order at the best price possible for that day. So you might have the time limit of by 12 p.m. or by 3 p.m. or by the time you leave the office, whatever it is. How are you going to do that? How do you figure out where to get the best price? Well, it's the VWAP. And that again, it's facts. That is what the VWAP is used for. It's an objective view of price in terms of discount, premium, and fair value. So that's why I like it. So if a market's bullish, let's say pound dollar here. Let's say I was super bullish on pound dollar, and I really thought it was going to go higher. These would be good opportunities to start picking up pound dollar. And maybe even here, after it bounced off the average price or the fair value, whatever you want to call it, because it's bounced off these levels, which are the sort of discounted areas. So it would make sense if the fundamentals were bullish, the higher time frame trends were bullish. Why wouldn't this market get picked up on these quote unquote discounted prices? And again, this is kind of, I mean, that is how it works, but the way I'm sort of explaining it is more theory. Obviously, there's no guarantee that it's going to bounce, but that's its use case. Gold to 3,000 would be heaven. I get higher than clouds. Yeah, I think yeah, if gold went to 3,000, I think we'd see some mass buying. Which VWAP? I use the anchored VWAP. It's the same with the fib. I mean, you know, I got a comment yesterday, someone asking, you know, basically saying that how can I not like FVGs and all the ICT stuff, but I use fibs because fibs basically are FVGs. And I was like, first of all, do not lie to me. Don't disrespect me like that. Second of all, fibs are quite literally a mathematical formula, and it's used and seen everywhere. You know, it's space, galaxies, nature, biology, markets. You know, it's one of those things. I don't really even know what the word is to describe it. It's one of those things that goes over my head a little bit, but it's a mathematical formula, and 50% retracements are very widely looked at across retail and institutional trading floors. So it's one of those that it just makes sense. You know, it's one of those things you don't need to watch 100 hours of YouTube videos to understand it, because it's so simple, basic, and it works. Obviously not every time. Nothing works every time, but you get what I'm saying? They fail too much. Well, I think you could say the same thing about anything failing too much, because obviously it all depends on how you trade around it. So I'm not going to buy whatever asset it is every time it touches a line, but I will do my due diligence. I'll put my biases in there. I will account for different parts of the market, whether it's support, resistance, trends, etc. And then that's kind of how I do it. Anyway, sorry, I know we've not really covered any markets there, have we? Bitcoin. Yeah, let's have a look. It seems Bitcoin is still really struggling to climb higher. However, I mean, technically, this looks like quite a nice opportunity. I'm not really bullish. I don't really lean either side on Bitcoin. I think it's one of those things. Yes, it could absolutely go higher over time, but short term, I'm completely clueless. It's not my bag of apples. So we're currently on the 200 moving average. We've had multiple wicks to the downside. So that does look like sellers are trying to step in, buyers are taking control. Very typical sort of reversal pattern, if you will. We've also got a pretty nice previous low or support level. So again, just from very basic technicals, it looks like it could go higher. But again, I don't trade Bitcoin, so take that with a grain of salt. Fibs are a universal constant. That's basically what I was looking to say, but couldn't think of. Euro Aussie. That's a good question. I've not paid any attention to the Australian dollar recently. Let's see what the Edge Finder is telling us about the Aussie. So it's at 50. What's Euro doing? 20. Well, just going off that, shorts make sense. However, the trend is bullish, which is a bit of a concern to me. So I don't want to be a seller because I'm counter trend trading. But I also don't really want to be a buyer because the Edgefinder's fundamental readings are telling me that shorts are like the more optimal decision. So I would not really do anything here, to be honest with you. Again, even this H4 looks like it wants to go higher, just because we've come into these moving averages. We've seen a bit of consolidation here, previous low, kind of a bullish moving average trend there. So yeah, I mean, to me, I've got the technicals are telling me one thing, and the fundamentals are telling me the opposite thing. So I can't justify doing either right now. Fibs, do you mean Fibonacci? Yes. You don't trade only fib. The fib just shows you where you're getting discounted value prices. Yeah, I mean, to be honest, that's another. I don't really care about like the terminology and the way, if you want to say it's a discounted price, which I'm not arguing against, but that's just not the way I see it. I just see it. It's moved back 50%. It's a reasonable area to see a continuation from. Still holding S&P? I am indeed. Yep. Over here. Euro yen. Euro yen. That's a good question. I'm a little bit hesitant on all yen pairs. So euro yen. Let's see. It seems like yen pairs are getting a bit of a bid. I don't think there's really any denying that the way we're seeing a drift to the upside. But my concern remains the same, that I do think longs make sense, and I do quite like it. The trend is bullish. I think the yen is weak. But again, there's that risk of the intervention. I do not want to get caught in that, because it's in my view, it's kind of a coin flip, because the fundamentals and the trend, yes, are bullish in my view, and I do think we could see higher prices just based on those things alone. But all it's going to take is for dollar yen to rally slightly too fast or slightly too high. The MOF's going to say, no, not today, and push it all the way back down, and either trailing stops get hit or you get stopped out. I don't want to deal with it, because I've got no need. I've got my portfolio is quite busy. I'm scaled into the S&P a few times. I am in GJ. I've got New Zealand US dollar as well. So I'm just not really that concerned about trading yen. Technical strategy with VWAP, very, very simple. So I'm just looking for trends, normally sort of 30-minute trends, 1-hour trends, 4-hour trends. Also accounting for my general fundamental bias. And then I'll be looking for pullbacks to VWAP, and then I'll look to go into the direction that I have my bias. However, I don't use it for any intraday or swing trading. When I'm using a VWAP, it's very quick. It's for a couple of pips, couple of points, whatever it is, and that's it, and then I'm out. But it's mainly for situations like I've got with gold, where I do have a bearish bias, but I cannot get in with a normal swing strategy. There's just no entry. So the only option for me to capitalize on my idea is by going down to different time frames and deploying a different strategy. So yeah, that's basically just it. Fibs work for me. I think fibs work across the board. It's just a case of knowing when to use them and when they're relevant. So for me, a fib, you could in theory draw a fib like this. And actually, in this case, it has worked quite well. You can see here rejection off the 618, and it's moving up. But I would never actually I'd never take a trade like that, because I would need, first of all, fundamentals to line up. I'd need a very established trend, and I need to see the fib golden zone line up with previous structure. So if you have ever watched my content before, you watch the way I trade, I will always be looking, or normally, this is sort of my general rule, but I will be looking for previous structure within this zone. And then that will give me a break and retest. Again, generally speaking. So it's about, not just drawing a fib and expecting it to reject at 50% and make easy money, but layering on your own approach and seeing how it works and obviously testing it and those types of things. Can you tell me how you use it? I'll tell you what, I can do that, yeah. But I'm a bit concerned that we're not doing any real analysis today. But I suppose we can do this as a more of a lesson stream. So VWAP is very simple. Let me tell you what, let me show you one of the trades I previously took so you can actually see sort of the logic behind it. Yeah, here. So this was on the daily open VWAP. So I drew this VWAP as soon as the date on the bottom of the screen changed from 21 to 22, and that's where for me that's where the day starts for this market. So we had the fair value here, trading in a premium. Bearing in mind I'm bearish, so all I was waiting for is for sellers to essentially take over. Price came back down below the average price, or the fair value price, or whatever you want to call it. Buyers tried to step in, failed, and we continued much, much lower. Had a correction back here, failed to break back above, again telling me sellers are in control, so I went short. Once we saw a continuation in that in my direction, we broke below this little support that we had on the 1 minute. I entered again and scaled in, and then I closed once we started approaching the London low VWAP right here. So it's quite discretional in terms of the entry method you use, but that's kind of as simple as I do it. It doesn't take many brain cells. What's your opinion on ADX trading? No idea. Dollar yen. Dollar yen's the same as what I said with euro yen. So I think yes, upside fundamentally, technically, it all makes sense. But again, it's just I really do think we're going to see an intervention. You know, I could be being paranoid. Maybe I'm missing out on money by you know, not taking the trade over something that might or might not happen. But that's just where I draw the line. I'm not going to take a trade with the chance that something's going to happen that I cannot manage or control, because you know, you could say, oh, I'm going to enter here, stop loss maybe below this low and let it run. That's completely fine. I would say it's a good trade idea. But then I'm assuming you guys have been in the markets long enough to have experienced one of these interventions. It's not fun. You could, you know, it could be any size. You know, it could even just be small. It could be something like that, and I'm overthinking it. Or it could be something much larger, and there is nothing you can do. We get no warning. It happens extremely quickly. So if you're not, in fact, even if you are sat right on the chart watching it, I don't think you would even be able to manage it. I don't think you would get the fill on time. And again, I think I'm not, you know, maybe you could. I've never actually tried to trade right as an intervention's happening, but that's just my thought process. But yeah, again, technicals, fundamentals, I think are bullish, yes, but for me, it's non-asymmetric risk. That's a big word, isn't it? That's probably the biggest word I'm going to use today. Asymmetric. Yes, Luggy, you know the source. VWAP settings, okay. So I use the orange for the fair value, white for the upper and lower band. And then I think these are just default. I haven't changed these settings. Is your Edge Finder optimized for mobile? I don't know. I'll be honest. I've never used it on my phone. Oh, are you talking about the dollar ball out? Looking for it to take out 98, then aim for 96. Oh, I see. Okay, so you're expecting. So 98, 96 could happen. I mean, the fact that we actually, is this a, let's see, is this a fib level? Oops, that's not what I want. No, it's not. But the fact we have came up towards, let's just say 99.5, just to make it easy. Sellers stepped in, buyers came back, failed again to break higher, and created a lower high. Created a lower low. We've come back up, created a lower high, and again, failed to break any higher and hold meaningful ground. And when I say meaningful ground, I mean above 99.5 to 100. it's a bit of a concern. I'm not sure I'd be willing to say that it's going to come down, in a great deal. I think, in my opinion, the more realistic situation for the dollar now is range bound. And that's pure. The only reason I think that is just because of the government shutdown. I don't think that we have the data to warrant an aggressive downside on the dollar just yet. Because don't forget, yes, we had poor ADP, and yes, we do have rate cuts on the table, but it's all priced in. There is nothing new. There's no new catalysts for major dollar bears to step in and start driving prices down significantly. Do you enter the market with, or do you enter market value or with limit order? 99.9% of the time it's market orders. I very rarely will use a limit order unless I want to take a trade, but I need to go away. So whenever maybe I'm going to bed and I think that my entry could get hit in Asia session when I'm not going to be awake, or if I need to go away for a few days or whatever it may be, then yes, but that's very rare. When are you streaming on, when am I streaming on my channel again? Oh, sorry, I just realized I've completely gone over my time by a minute and a half. I don't know when I'm streaming on my channel again, to be honest. I'm very busy on the business side of things. Anyway, ladies and gentlemen, I apologize. I know we didn't get to really any markets. That was more of a VWAP lesson video. But anyway, guys, I'll see you tomorrow. Have a good one. Stay safe. Don't get margin called. Enjoy the rest of your days. And thank you for having me.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So hope everyone is doing well. If you have any questions, any comments, any chart requests, make sure to put it in the chat. I know yesterday we had quite a lot of comments, so if I missed any, make sure to put them in the comment section now. What is the story for today? Well, we can see that gold and silver are still going lower. So looks like this is the big pullback. Looks like it is time for the metals market to correct a little bit. So from the highs, gold is down. Let's see. Currently down -7%. Silver from the highs is down -10.6%. So that is quite significant. That is a big number. And I'm looking to get in. I'm looking to buy the dip. I'm looking to buy the pullback. I'm also looking for some sort of a sign that we have kind of bounced. Let me check the edge finder as well. What does it say for gold and silver? So I think it's probably a neutral reading. Yeah, neutral on gold. Silver is neutral as well. So not the best reading from the edge finder, if I'm being honest. I would expect a bigger correction. I would expect for this pullback to continue down a bit more. So essentially, once you have such an explosion to the upside like this, the correction can also be quite significant. The correction can be also quite big. If you're looking at some fib levels, I'm not sure where exactly we would put them. I just visually think that this is not the end. This is not the end of the sell-off, end of the pullback, and that we can go down a bit more. We have touched the 20 EMA. Okay, so we have touched the 20 EMA. I know Nick is probably going to wait for a bullish signal on the edge finder to buy. So he's probably going to wait for gold and silver to become bullish, which is a good approach. So it is a good thing to do. I may do the same thing. Okay. What I definitely don't want to do is I don't want to catch a falling knife. So if the markets just melt lower with massive momentum, I don't want to be buying into the falling knife. Silver is now at 48, so we have crossed the 50 mark, went above it, and then pushed back below it. We're now 48. I heard 45 could be a good target for a pullback. Let's see, let's zoom out a bit. Yeah, I think 45, 44, that may be a good number. That may be sort of a kind of a pullback that's big enough. So that also may be a level where getting in on a buy setup could be a smart thing to do. So possibly this level of support right here. Other than the metals market, let's see the stock market. So S&P is not at all-time highs. The NASDAQ went into all-time highs yesterday. So on Tuesday, now it is pausing a little bit. Is there enough steam? Is there enough room for this thing to continue? Well, you have to know what is fueling the rally. What is currently fueling the rally is the artificial intelligence. Okay, so the artificial intelligence bubble is what fueled this massive rally to the upside. I think that sort of artificial intelligence story has become a bit stale. I think the momentum behind that narrative has possibly diminished. And if you look at what is happening in the stock market, it is similar to the dot-com bubble. So during the dot-com bubble, if any company would add .com to their name, their stock would highly appreciate in value. Well, the current modern alternative to the .com bubble is, let's say, doing a deal with OpenAI. So there were a couple of companies, actually a lot of companies who partnered with OpenAI, and they were betting on their stock to go to the upside on that news. Well, if you have been watching these US companies announcing partnerships with OpenAI, you would see that the movement in their stock price is getting less and less. So essentially, the companies that already grabbed that opportunity enjoyed the higher prices in the stock market, but the ones that are currently doing it, they're not appreciating as much. So they don't have a huge reaction in the price. That is what is happening in the stock market. So the current AI narrative is getting a bit stale, is kind of slowing down, which is not the best for the price of the NASDAQ. Okay, maybe even not the best for the S&P 500, because the biggest players in the S&P are technology companies using AI. So could we see a big pullback? I don't think so. I don't think we'll see a massive pullback, but we could see a bit of a slowdown, let's say. So a bit of a slowdown like this, bit of a stagnation. So far we have had the sideways up movement. That is what this is called. So they call it sideways up, push up, sideways, push, sideways, kind of push, sideways, which is pretty tough to trade. So pretty tough to trade because you're not getting any drastic pullbacks. You're not getting any significant pullbacks. So it's tough to buy the dip. That is what is going on in the stock market. As far as currencies go, USD CAD is a position that I did take yesterday. So if you're in the A1 Discord, you would have gotten this trade signal. And if you want to join the A1 Discord, if you're not already in, you can do so using my discount code, which is MARKO. This discount works both for the A1 Discord and for the Edge Finder as well. So if you want to get the software, if you want to get the trade signals, trade breakdowns, trade analysis, you can do so with my code. USD CAD, I got into an initial position because I didn't really believe that we will reach this level. So I already had a buy limit set, but I wasn't sure if it was going to get tagged. So essentially, I got into an initial position. It's not a huge amount of risk. It's just an initial position. So it's, I would say, a low amount of risk. My bet is dollar strength, CAD weakness. I'm also doing a Euro CAD buy setup, which is unfortunately now in some drawdown. So we do have a Bank of Canada interest rate decision. I think it's on the 29th of October. Let me see. Let's see. Yeah, so BOC rate statement, overnight rate, monetary policy report. So that is happening on the 29th of October. We will get some CAD news. If you look at the long-term data, you would notice that the CAD is definitely not doing well. Okay, so even if they decide to pause with interest rate cuts, even if they say inflation is high, I still think the CAD is pretty weak. So if you look at the GDP for the CAD, okay, that's it. All over the place. Unemployment for the CAD is rising 7.1%. Relative to other economies, this is really, really high. This is really, really bad. CPI is around 2.4%, so definitely rising, okay? Let me just go grab a glass of water. I'll be back. Okay. So long-term data, pretty bad. This is called the stagflation period. So inflation is getting higher, growth is not good, unemployment is high. That should be, in theory, bearish for the Canadian dollar. So that's my bet. But also, I'm very bullish on the US dollar. I really like the US dollar. So let me just check the short-term data. We are not getting any new data. The US government is shut down, but I would say overall, we're still looking pretty healthy, okay? And one thing that is interesting, if you look at the Fed watch tool, right here, you will notice that October rate cut priced in, December rate cut priced in. So it's very tough for the Fed to get more dovish, which means it's pretty easy for them to get more hawkish. What do we have this week? Well, we actually have the CPI print. We have the inflation print. So the BLS, Bureau of Labor Statistics, they have decided to print the CPI for this week. And I'm actually expecting, from my research, from looking at I think it's the ISM manufacturing and some of the other metrics, which can be used to predict CPI, okay? So there's many different metrics that come out for the US economy, and some of them can be used to predict CPI. And these metrics lately have been elevated, which means the CPI that's going to come out could come out a bit elevated as well. What will happen if we get a hot CPI print? I think the Fed could get more hawkish, right? Hawkish Fed means a higher DXY, means a higher US dollar. And I think on the DXY, we could hit this swing high. I think that is definitely achievable. So like this, let's say, okay? Well, probably if you get a hot CPI print, it could be a quick move to the upside. That is kind of my forecast. That is what my research is telling me. That is what I've seen online. So people, or the Fed is very, very dovish. And people are expecting 2 rate cuts. Again, 2 rate cuts are pretty much definite. They're totally priced in. So it's going to take very little for the Fed to change their mind. It's going to take very little force for the Fed to become more dovish, maybe cancel a rate cut in December, which will then need to be priced into the markets, and the US dollar will need to gain value. So that's the sort of trading edge I have researched. I have kind of not developed, but found out about. And the play is buying USD CAD and maybe buying other dollar pairs. So maybe selling euro dollar, selling Aussie dollar. Let's see. What else do we have? Well, UJ, we can look at UJ. We can look at USD JPY. Damn, it already went up a bit. Oh, okay. So UJ is already up. I know I had a buy limit. I kind of chickened out of the trade. I didn't like it at the time. I am considering maybe getting in now. So UJ might be a good play to the upside. Essentially, another reason why I want to buy the dollar going into the month's end is that basically there is the kind of end of the month rebalancing. So what is that? You have major US companies like Apple, Amazon, Microsoft, Nvidia. They receive revenue all over the world. They receive euros, pounds, yen, Chinese yuan, all sorts of stuff. Usually at the end of the month, in the last couple of days of the month, they exchange foreign currency for the US dollars. So US dollar goes up, and you can do that research on your own. You can ask ChatGPT, give me the calculations in the last 7 days of the month. In how many cases does the dollar gain value, DXY, and in how many cases does the DXY lose value? The number is, in those last 7 days, there is a 55% chance that the dollar will gain value, and there is a 45% chance that the dollar will lose value. So that's an added confluence to buy US dollars going into the month's end. So that's another bet or another reason why I'm bullish on the US dollar. So I think the best play right now is probably buying USD CAD, buying Euro CAD, of course, selling Euro dollar, selling GBP USD, selling Aussie dollar. Let me see GBP USD. So it's finally kind of rolling over here, but it still looks a bit flat overall, if I'm being honest. Still looks a bit flat. Aussie dollar, it is below the 20 MA, although it does look flat as well. UJ is an interesting one, I have to say. So UJ, I am watching UJ to see what is going to happen here. So yeah, I wanted to take a buy setup. I chickened out a bit. Maybe I can reconsider. If I also check in the Discord, when would I have my stop loss? So let me see in my Discord, or not my Discord, but the Forex trades for UJ. Let's see. So stop 149,558. 149,558. Okay, so my position would definitely be stopped out if I did take it. So the game plan was to buy it on a buy limit here and to have the stop loss like this. Good thing I didn't take it in the end, but the reaction was definitely there, and we did go to the upside. Some people have a lot of trouble with buying UJ because they're afraid of an intervention. They're afraid of the Bank of Japan stepping in and crushing UJ at around 1.156, 157. But I think you can target this level just below 156 and get away with it. So maybe a possible trade idea would be something like this, targeting just below that intervention level. That is what I'm watching. And it is time for me to mention the sponsor of today's video, which is DNA Funded. So if you guys are looking for a prop firm, if you're looking to expand your trading capital, you're looking for a reliable prop firm ran by professionals, you're looking for a prop firm that's going to be here for the next few years, that's not going to run away with your money in a couple of months, well, DNA Funded is for you. Okay. Now, there are a couple of good, reliable prop firms, but DNA Funded offers, I would say, the best price with our discount code, which is A1 Live. Okay. So with A1 Live, you get 25% off any of the challenges. This discount is specifically for you guys watching the streams. If you're interested, A1 Live, 25% off any of the challenges. You get a really good price and you're in safe hands. This is my 50K account for testing ChatGPT trade signals. Currently, I'm a bit negative. We're just running around break even. So this is sort of the break even period. I'll keep monitoring, keep executing trades, and I will update you on the situation. We can see the closed trades right here. Yeah, okay, cool. So essentially, if you want to expand your capital, check it out. Now, let me look at the comment section. Let me see what's up in the comments. Let's see. Hey Sluggy, hey Joshua. I'm doing well. How are you? The developer, hey Marco, please cover euro dollar. Sure. Gold outlook. NJ, hi Marco, how's it going? What are your thoughts on the gaps on the Nasdaq and the S&P? Well, I can only tell you with my tickers, it should be IC markets, if I'm being honest, but I'm not sure what the ticker is off the top of my head. Which gaps exactly? Which gaps are you referring to exactly? Again, if you can give me a specific ticker where you can see the gaps, then I can take a closer look. So please just write the specific ticker in the chat. USD CAD is to the sell. Not long. Well, that's why we have the market. So you have buyers, you have sellers. So thank you for filling my buy orders if you're selling, and we will see who is right. In the end, we can both be, let's say, I can be right, you can be wrong, or you can be right, I can be wrong on this specific trade, but one trade doesn't really matter. It's about the big sample size. It's about the results in 1 year. So it's pretty interesting to see how some people want to sell something, some people want to buy something, but on a large sample size, both can be correct. Anyway, Ballout, thank you for filling my buy limits. Today, the CPI for UK came in soft. Thoughts on the upcoming GEP setups? Let's see. CPI came, it did come in soft actually. Okay, let me see the Edge Finder. So looks like we haven't got an update yet here, or did we? Yeah, anyways, it did come in soft. What does that mean? Well, that is a bit better for the stagflation scenario. I was talking about the UK. I was talking about the pound. I mentioned I want to sell the pound. It is one of the best things to sell in 2025 alongside the CAD. Does this change the overall story? I don't think it does. Okay, so the previous number was 3.8. The actual number is 3.8. The forecast was for a higher inflation print. I would say long-term data. Let me also check the short-term data. Yeah, pretty bad for the short-term. Long-term, let's see. In my opinion, all over the place. So not looking the greatest. The labor data, unemployment, GBP. Yeah, unemployment is super bad in the UK, 4.8%. And then inflation we mentioned is, I mean, it's high. It's still pretty high, 3.8%. That is still quite a big number. I would say we're still in a stagflation scenario for the GBP. Am I looking now for active setups? No, not currently. So I'm not looking to sell GBP/USD currently. I think we're kind of flat here. I did try to get in on a sell setup. I got taken out, unfortunately. On Oanda, or sorry, not on Oanda, but Euro GBP. Let me check out that one. Yeah, just super flat. Super flat. I have my alerts set. If it does want to go up, if it wants to cross this level, then I may become interested. Insights on GBP pairs. Aussie had some nasty unemployment numbers. Yeah. Taco, like the US dollar. Anyone saw Beyond Meat? Yeah, I saw it. It's crazy. If you can give me the ticker, I'm not sure what is the ticker for Beyond Meat, but we can take a look at that. Up over 400% over the last 3 days. But Marco, that DXY range is nasty. It needs some positive catalyst to break above. I would say the catalyst will be the unexpected hot CPI print. Again, I can't guarantee it will happen, but it may happen. Okay. I think there's a higher chance of a hotter CPI print than a colder CPI print. And I think that rocks the market. I think that makes the Fed be more hawkish because Fed is already super dovish. Can they get more dovish? No, they can't get more dovish. So they can only get hawkish from this point. Complete opposite of my view. Looks like he's super bullish DXY. I am definitely bullish. And I mean, I have a bet. So I have a buy limit, or I have a buy trade in the market, basically. Okay. Can't wait to see his shocked face. Like what the hell happened to the dollar? Have to say Trump taco trade at least once. Most likely it will be Friday. Is that 5% enough of an edge for you? It's not the only confluence. So it is one of the confluences. You have that confluence and you have the thing I was just talking about with a possible hot CPI print. Okay. So what's the line on the bottom and top mean of your system? It is just an indicator. This one. So GT recent high low by Bong Hyun. That's the indicator. It's just to spot highs and lows. It's nothing super fancy. It's definitely not needed. So yeah. Joshua says unskippable ad. Yeah, I get you every time. So Jeannie says, hello, Marco. How does the edge finder rate UK 100 as bearish when it is in a clear option? I just lost 2K shorting that index following edge finder's bearish data. Very bitter pill to swallow considering. Well, look, first, how the hell did you risk $2,000, I presume? That is a huge amount of money. So that's the first problem. Your risk management is bad. Second, probabilities in the markets. You're not going to win every trade. So the best traders in the world, if they can have a 60% win rate, they are already super happy. So 50 to 60% win rate is kind of the top of what you can achieve on a large sample size. And after all of that, edge finder signal is not a guarantee of what will happen in the markets. And also, it is important to time the edge finder signal with technical analysis, okay, with levels. So although the edge finder may have been bearish on the UK 100, maybe the timing was not right, okay? And again, not every signal from the edge finder will end up being a successful trade. DNA Fund, its 40% profit distribution is ASXZ. Not sure what that means. Yes, so it is an extra rule that you need to respect. That is correct. You need to account for that when executing your trades and applying your strategy to the challenge. Good evening, Marco. I wonder if you can share a word on my concern. Do all platforms in the US charge a withdrawal fee? I'm not sure about that. So I'm not from the US. I don't know anything about that. My broker doesn't charge a fee. I have never heard of a broker actually charging a withdrawal fee. I would think most of the brokers that are charging a withdrawal fee are scammers. So be very careful who is charging you that fee. I would definitely look into it more. Look at the reviews online. Look at Trustpilot. Do some research. There's definitely going to be information online. Are you also trading gold? Well, I'm looking for buy entries, possibly. I mean, as I mentioned, this is definitely a falling knife. So I want to buy the dip, but I don't want to buy if we're just going to continue crashing like this. I want to see some sort of a reaction. I want to see some bullish price action, let's say, and then I would be looking for some buy setups. Okay. Marco, when the DXY falls, I'm going to send you an invoice for my time. Okay, sure. Well, it'll be interesting. See you on Friday. I'll be here. I'll be streaming, so we can watch it together. When is it? Let me see. Core CPI 1430. When am I coming? Let's see. So I'm coming at. Wait a second, my screen got messed up. 9 a.m. I think that's 3 p.m. Great. Okay, so half an hour later after the CPI print, we'll come on the charts, we'll take a look what happened. Ballout says we go down. I say we go up. Again, it's not a definite thing. You cannot have 100% win rate. You cannot have 100%, let's say, forecast success, but it's going to be interesting. So we are near the end of the stream. And just to recap what is happening in the markets, NASDAQ starting to slow down, starting to pull back. I'm looking to buy it, but I want to catch a pullback, let's say. So I want to get in on, let's say, this level of support, maybe even a bit lower. I didn't buy the dip, unfortunately, so I missed the taco trade. Gold, falling knife, silver, falling knife. I'm looking for some sort of a reaction. I'm looking for some sort of bullish candles, maybe, for us to go down a bit more. USD CAD, I'm in this trade, and I have a buy limit set, which probably has been tagged. Let's see. Let me see that. So USD CAD, yeah, okay. So the second position is tagged in as well. And I have Euro CAD running. Possibly looking for buy setups on UJ. So UJ, I think we can go to 155 or 156. I think that can be achieved. I think the intervention level is somewhere around here. So if we take profit right below that, we should be fine. Okay. Last comment. Naomi says, I got scammed by CK Capital prop firm, made profit without validating anything. Yeah, so you need to be really, really careful. The telltale sign of a shady scammy prop firm is if they offer crazy high discounts like 50, 60, or 70%, and if they're being ran by people that are 18 years old. So if they're being ran by people flashing a lot of expensive stuff and just talking about money, probably a big red flag, okay? So be very, very careful. If you do want to check out a reliable prop firm, check out DNA Funded, 25% off. A1 Live is the code. That's it from me. Can't wait until Friday. I'm very excited. Good luck in the markets, and I will see you tomorrow. See you. Let me just contact James. Awkward. Yeah, just waiting for James to close the stream. If you have any last minute questions, maybe we can do them.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.